Let me be honest with you right from the start. Right now, XRP feels boring, painfully boring. The price is down. Social sentiment is negative. People are frustrated, tired, and honestly embarrassed to still be holding. And that's exactly why I wanted to make this video. Because while most people are staring at price candles, something far more important is happening underneath the surface. Something most retail investors don't track, don't understand, and usually don't notice until it's too late. This isn't about hype. This isn't about moon predictions. This is about liquidity, supply control, and who actually holds the power in XRP right now. And if you understand this properly, you'll stop asking why XRP isn't moving, and start asking why it could move much faster than expected when conditions flip. Let's start with the obvious. XRP has taken a hit. From the highs near 3.86, price has fallen close to 185, roughly a 50% drawdown. That kind of move hurts, especially for anyone who bought late or chased momentum. And like clockwork, when price drops this hard, something always happens on-chain. Exchange inflows spike. People panic. People cut losses. People rush to exchanges to sell. And that's exactly what the data shows. Starting around December 15th, XRP inflows to major exchanges, especially Binance, surged dramatically. Daily inflows jumped into the range of 35 million to over 116 million XRP per day. That's not random activity. That's short-term holders reacting emotionally to price weakness. At face value, this looks bearish. More tokens hitting exchanges usually means more selling pressure. But here's where most people stop their analysis and miss the part that actually matters. Here's the paradox. Even though XRP inflows to exchanges increased, the total XRP balance held on exchanges keeps going down. Let that sink in. Despite all this selling behavior, exchange reserves have fallen to around 1.5 billion XRP, and they've been trending lower over time. So what does that tell us? It tells us two forces are happening at the same time. Short-term traders are depositing XRP to sell, but the overall pool of XRP available to trade is shrinking. That's not normal in panic markets. Normally, when fear spikes, exchange balances explode upward. Coins flood in, liquidity deepens, price stabilizes. That's not what's happening here. Instead, we're seeing a thinner and thinner liquidity buffer. And when liquidity thins, price becomes more sensitive, not less. This is how markets quietly set up volatility, both up and down. Now let's talk about ownership, because this is where things get uncomfortable. Most XRP wallets are tiny. Over 6 million XRP wallets hold 500 XRP or less. That means the vast majority of participants simply don't have the capital to meaningfully move the market. They can't save the dip. They can't absorb large sell walls. They can't create sustained demand. Meanwhile, a much smaller group of wallets, whales and large holders, control a disproportionate amount of supply. This creates a structural imbalance. Many small holders with limited buying power, fewer large holders with real influence over liquidity. So when price drops and retail sells out of frustration, it doesn't actually increase long-term supply pressure. It transfers control. This is how markets consolidate power quietly. This is one of the biggest misconceptions in XRP, and almost nobody talks about it properly. Yes, XRP has a large circulating supply on paper, but not all circulating supply is actually liquid. A meaningful portion of XRP is locked in escrow, functionally reserved due to ledger requirements, held in wallets that rarely transact, sitting outside exchanges entirely. So while headlines show a massive supply number, the true tradable float is far smaller. And that matters because price reacts to liquid supply, not theoretical supply. If demand increases while real liquidity stays thin, price doesn't move gradually. It jumps. This is what traders call a compressed or spring-loaded market. Here's another uncomfortable reality. Accumulating XRP today is more expensive than it was a year ago. Buying 1,000 XRP now costs roughly $1,650, compared to around $500 not that long ago. That alone changes behavior. Fewer retail investors can average down. Fewer people can add size. Dip buying becomes selective, not aggressive. So even if sentiment improves slightly, retail alone won't be able to supply meaningful demand, which means when demand does return, it won't come from emotion. It will come from capital with size, and capital with size moves markets fast. Before we go further, I want to pause here, because understanding this kind of market structure is exactly where most people struggle. This is why I personally use Unic. Unic isn't about chasing hype or guessing tops and bottoms. It's built for understanding pre-market behavior, OTC liquidity, and early positioning, the same places where large players move before price reacts. If you want to learn how supply actually shifts hands before charts light up, Unic is one of the few platforms that helps you see that side of the market. I'll leave the link below, but let's continue. Right now, XRP sentiment is ugly. Negative comments dominate forums. Social enthusiasm is near cycle lows. People are tired of waiting. And historically, that's exactly when structure starts to matter more than emotion. When markets are euphoric, liquidity is thick and forgiving. When markets are apathetic, liquidity thins and reactions get violent. XRP isn't being ignored because it's dead. It's being ignored because control is consolidating quietly. That doesn't guarantee upside, but it does mean the next meaningful move, in either direction, won't be slow. And this is why platforms like Unic matter in moments like this. Unic gives traders and long-term investors access to off-exchange liquidity, pre-market instruments, and structured positioning, tools designed for quiet phases, not hype cycles. When liquidity is thin and sentiment is weak, that's when structure decides who benefits later. If you want to understand where value is moving before it becomes obvious, Unic is worth exploring. Let me leave you with this. XRP isn't in consensus right now. Retail is frustrated. Price looks weak. Sentiment feels broken. But under the surface, we see shrinking exchange reserves, rising concentration of supply, reduced retail buying power, and a liquidity structure that can tighten quickly. This isn't a bullish guarantee. It's a structural reality. And markets don't reward emotions. They reward positioning. So instead of asking, why isn't XRP pumping? The better question is, who will control liquidity when demand returns? That's the game being played right now. Stay patient, stay informed, and don't confuse silence with weakness. If this breakdown helped you think more clearly, hit like, subscribe, and let me know your thoughts below. I'll see you in the next one.